Good afternoon, everyone. Welcome back to Invest IQ. Hopefully, everyone's doing pretty well. Hopefully, you all enjoy your Thanksgiving or whatnot. I surely did enjoy my Thanksgiving. But without further ado, we want to go ahead and kind of jump right into this. So again, this is another quarterly update on the portfolio, update on the strategy, just get a better understanding framework of how everything is going. So let's jump right into it, without wasting any more time. Okay, so first we're going to start off with a live view. I mean, right now it is Sunday, so the typical stock market like the S&P or whatnot are closed other than crypto. You can trade crypto at this time, but the stocks that I'm typically invested in, like Stitch Fix or any other stock that you want to be invested in, they're closed at this moment because on the weekends they're typically closed. But with that being said, here's the live outlook. This is only taking account to the cryptos that I have, which is little to none. Um, but then let's go out to one day. Again, it's still because today is Sunday. Last day was Saturday. But so 1 week. I want to go ahead and, but I want to jump back up to 1 month because that's something major that I've changed within the portfolio. So as we can see, within 1 month, we're up 10.66%. I think that's pretty good. As you can see, it spiked up here, and then it just kind of went plateau. This is when I sold my shares, all my shares, not all of it. I still have like about a fractional shares at like 0.46 of Stitch Fix. Um, but this is when I sold majority of of my shares. And then so I'm just waiting for the price to correct at this current moment. But let's also jump back out to the 3 month because that's how I typically keep track of, if I'm actually, doing pretty good, if I'm beating expectations or anything like that. So we jump out to 3 months for within the quarter. I am up 12.64%. I still think that's pretty good. I am beating the 401ks return, which is pretty good, by 150%. So I think that's in 1 quarter. So I think that's really, really good. So that is showing the second consecutive, I think, quarter of improvement. But yeah. So again, let's just go ahead and take a look at the year to date. Just a little bit of overview of it all. Just recap. So year to date, so beginning of January, I am up 8.77%. I think that's pretty positive. That's pretty good, upward trend that we're looking at. And in 1 year, let's take a look back. Again, I started this I saw the strategy. Um, June. That's when I picked up on it. And then it's my second time, as you can see, this long plateau. And then there's another long plateau that's going to be coming. So this is my second quarter using this strategy. I'm liking it so far. I'm getting returns instead of, just negative returns. I'm actually making money. So that's pretty positive. But this is when I started actually like investing into Stitch Fix right over here. But let's do all time. Up all time, we're down 12.87%, which I still don't think is a bad thing. Um, I am in terms of, position from previously from our last video, we did make an improvement in terms of beating the all time. I think we'll beat the all time. It will probably be I know for sure Q3. I'm searching for Q3 outlook, but for regular one typically is Q2. But during Q2 of 2026, I expect this portfolio to definitely for sure beat the all-time 12.87%. I think we beat it before then, or if not at that time, but I know for sure Q2 is going to be a really, really good year next year. So I know for sure we're going to be beating at 12.87%, and maybe also hit our all-time high, beating our all-time high right now. So that's pretty good. And also, expect more. and expect this to increase. I'll be putting more of my personal funds into this, into it. So just keep a lookout on whatnot. I want to at least like I said, I want to at least get it to around 5 grand or more. I'm about 1,300, 300, 364, I guess, no, yeah, shy, just about. So I don't think that's pretty bad. That's manageable. But do expect more investments into it, trying to get back at that 5 grand, because I think 5 grand is a sweet spot. But without further ado, let's go ahead and jump into the stock that we're currently invested into right now, Stitch Fix. So if you didn't know, Stitch Fix not recently, they had their earnings calls not so long ago. It was on, let me take a look at my calendar. It was on the 4th of last, that's the 2 weeks now, but it was on the 4th, so Thursday. Today is the 14th, so 10 days, 10 days ago. So let's go ahead and just take a look at the stock real quick. All right, yes. So on the 4th, as you can see, um, they did a 1 month, but as you can see on the 4th, leading up to it, the stock definitely increased, but then on the 4th, it jumped up. Um, because we're going to jump a little bit more into the results of the earnings calls, of the financial quarter, and why it reacted the way it did in my kind of expectations. I mean, from previously, what I anticipated, I didn't think I was wrong. I sold when it was around $5. No, no, yeah, around no, no, yeah, $5 and like 17 cents. That's when I sold. I made some profit. I made some money. That's why I'm at the 3 point. That's why I'm doing pretty good quarter. I had my 8% return for the quarter because of that. I decided to sell. I'll tell you why I sold before like, on the 4th, the day of the 4th, like in probably like 30 minutes before after hour trading closed. I sold all my shares during that time. And then as you can see on the 5th, it actually went up to $5 and like because I saw like around here, like right around here. And then it went up to around like $5 and 32 cents per share. And then it kind of went a little up and forth and it went back up. And then it's gonna go down. I mean, for the quarter wise, based off their expectations or whatnot, Stitch Fix definitely did do pretty good. I was surprised on their R pack, the amount of percentage compared to the other previous quarters. Their R pack was really, really well, so they generated more revenue. But the only thing that I think that the stock will dip again will correct is because of the active client. It's still an active client decline. It's still operating at a net loss. But I think investors were typically that's a good sign, when they give you a little boost in your stock like that. I think they went up around 20%, which is a really good sign that the investors are happy with what's going on within the company. Well, the company isn't necessarily out of the woods yet, but it's getting there. And the stuff that, the CEO, Matt Bear, is implementing is actually working. So I think that's a really, really good sign. Um, let's go ahead, just take a step back on 3 quarters. I mean, yes, it's up 3 months, excuse me. Um, I thought, so going back to my predictions, I thought that the stock was going to go up to around $5 per share. It never really touched that. Highest it went to before, because this was on the 24th, or the 23rd, that was their previous earnings call because they're a quarter ahead. Their financials are a quarter ahead. So during that time, they were releasing Q4 2025. But during this time, right on the 24th, they released, yeah, right over here. Like I saw like right up here, but at this time they released a Q1 2026. So they're 1 quarter ahead. They're in terms of financials, but typically even normally people right now we're in Q4, but they hold Q4 2025, but the financial they release was a Q1 2026. So just something to keep in mind. But I thought that the stock would go up back to like $5, like mid $5 or whatnot, but never really touched $5, which is pretty interesting. I think that the government shut down, as you can see. I think all this was uncertainty. The government shutdown really just investors weren't really happy with anything, so they were just pulling the money back and being more conservative with it. I think that's some of the reasons why the stock didn't necessarily jump up or at all, anything like that. But after the earnings call, it's good to see that the stock actually went up to $5. That's where I was hoping it to be, $5.62 per share. That's middle to high end. And I think that's a pretty good spot. But as you can see, the investors did bring it back up there, but then you can see that there's a decline. I think that there's still going to be, I think there's a correction because the quarter was not, it isn't bad for a turnaround. Like that means that they're hitting their goals or whatnot. Like I just see this as a more of a confidence boost. Like investors are more confident into it, so that's why the stock went back up to like $5 or one. But I don't think it's going to stay like that over the next couple over the month or so. So I'm waiting until the stock corrects itself. Like I said, I want to get in around $4 per share. $3 would be anything around three would be steal. But if I get my average near to $3, like low fours, I'll be pretty happy. Um, but yeah, so that's a major update within the quarter. There's just a lot of uncertainty here, so investors weren't really happy. So I wasn't necessarily wrong per se, but I definitely did overestimate. So let's go ahead and just jump into a little bit of the company of Stitch Fix, of what I'm invested in right now. So right now we are at the corporate overview. So let's go ahead and just take a look at some of the recent, news or whatnot. We start from the top. As you can see, like Stitch Fix, they've been pretty active, So right now they actually set out a trend for women's fashion in 2025 and the shifts to watch out for in 2026. All this is using their algorithms to predict what the outcome is going to be. Like I'm not going to go super too in depth with this. We'll go more in depth with the numbers and the financials, but in terms of this, we're just going to go over briefly. I think it was Red Chili. Like it basically goes over some of the things that they saw that resonated well with their clients. Some, like, for example, women typically, especially that use that service, the greatest impacts of client fashion, like they followed, Jennifer Aniston. I think I'm saying her. I'm not sure if I'm pronouncing her, but she's, if y'all don't know her, she is from I think Friends. And then Taylor Swift, if you don't know her, I don't know where you've been hiding around under a rock. Everybody knows Taylor Swift. She's just a singer. That's really um all the women that I'm talking to that I know of know Taylor Swift. That's why I know of that name, because all the women, they listen to her music. So it's very, very popular too within the female or whatnot. And the last one is Anna Hathaway. So you just, again, this just kind of give you a little bit more insight of what they did find. I think it's really interesting. I read all of it before. So the interesting part was the color of the year was chili red. But yeah, so it's real nice. So that's good to see that the companies, is actually proactively doing this and actually getting ahead with the trends or whatnot, and being able to see it. Another one that they did, I already watched this, is they went ahead and set up a virtual those capital markets with KeyBank. This is something similar to what they did with TAG, Telsey Advisory Group. They were there just kind of talking a little bit more about the business. Like most of the stuff that they said, I already heard of it, but I still wanted to listen in case that there was something new or something else that they brought into perspective, so I can get a better understanding of everything that's going on within the business. But everything that they said within the Key Bank Capitalist, the meeting was around like 30, 35, 40 minutes, so it wasn't too long, but I did watch it. But that's what they did. So I'm relatively happy with what they're doing with the business, especially interacting with different banks. As an investor, I'm more confident in that. And if what we're all waiting for is the Q1 financial results, we'll do a little bit more of a deep dive. This is very, very important. So as you can see, so what the CEO said was this Q1 was a strong start to the fiscal year. We accelerated year-over-year revenue growth to 7.3% and captured considerable market share gains, which I think is pretty interesting because you got to understand like some of the competitors that Stitch Fix has, and you got to also understand the environment, the consumer environment at the current moment. Especially with tariffs and prices, especially on some customers or whatnot. Um, you know, it's interesting to see that the company's still growing within this, economy. Not to say that everybody is doing pretty bad within this economy. Some people are making money within this economy, and that's a pretty good thing. But when you're talking about the masses, you just a real thing to point at. I like to watch some videos like on YouTube, try to get a better understanding of how customers perceive the style and service and everything like that. And they've been compared to like another one that does like personal styling service. It's called Oneable. And I've been seeing that they haven't been doing really, really well within their subscriptions so far, like their results or anything like that. And plus, they're not as innovative as Stitch Fix. Some of the customers are actually stealing some customers from Wonderful and other retailers as well. Because you gotta understand their value prop, Stitch Fix value proposition. I think it's pretty strong, especially within a tough, economy like this. Moving on, as a result of the successful execution of our transformation strategy, we are increasingly becoming the retailer of choice for more of our clients' apparel and accessory needs. We are doing this by leveraging the latest in Gen AI technology, which is, I think Stitch Fix Vision, which is really cool that they came out with. The enterprise of our human stylists, the expertise, excuse me, of our human stylists and our assortment of leading brands to deliver the most client-centric and personalized shopping experience. So I think that's pretty good. That's some high. I mean, the CEO is always going to say that they had a really good quarter, saying that they beat their expectations. But you got to understand how much they beat it by, because if they beat it by 0.1% or 1%, that's still beating it. They're not wrong, but you want to get a better understanding of how much they beat it by. So let's just go ahead and take little more in-depth look at the numbers. So for first quarter physical 2026, so net revenue of 342.1 million, an increase of here. Let's actually let's go to the presentation. Yes, let's go to the presentation because I think the presentation will give us a better view of everything. So let's go to the presentation. So you can see it based off of the other quarterly. Again, this isn't financial advice. I would highly recommend for you just to read all of the safe harbor, even on this channel as well. This isn't financial advice. I'm not advising you on anything. I'm just sharing with you my path. You can do whatever you want with it, my strategy. You can do whatever you want with it, but like legally, I'm not, go ahead and recommending anything like that to you. But just so let's go ahead and just take a little a more deep dive into it. So for people that's pretty new here that don't know much about Stitch Fix, here's a little bit of a timeline. Katrina Lakes, she is the founder of Stitch Fix, which was pretty interesting. It was back in Cambridge when she went to, I think, Harvard. One of the clothing brand like Hawthorne, if it's 41 Hawthorne, I think that's the street that she lived in, which is pretty interesting. It wasn't always called Stitch Fix, but look, so and then the first group of stylists hired, as you can see, 2013 and 2016. Then the men's business launched, and then they hit their first IPO in 2017. And they launched a kids business in 2018, and then in 2021 they launched Freestyle, and this is when that transition happened in 2023. Matt Baer came in as CEO, and then 24 a refresh brand identity. And then in 25, they came out with all these innovative, AI, mainly customer centric shopping experience, which I think is really, really good. I think everything's paying off from their previous investments. So as you can see, let's just dive a little bit more. Let's go a little bit lower down. Some of the private brands some of the brands they have. Let's take a look. This is how that like these are some of the new things that they included. Stitch Fix Vision, where customers can actually take photos of themselves and then see themselves in the outfit on their phone and can swipe right, left, like on an item, like on an outfit, and you can shop for the whole outfit on Stitch Fix, which I think is really, really amazing. Brings more eyes into it and allows you to, reach other customers or make more sales overall. Client Stylist Connect, I think is also really good. Just trying to continue to bridge that relationship, build that relationship because business is more relational than transactional. And then also launch family accounts, which is I think is really, really good because you got to understand the customer base within Stitch Fix or whatnot. So I think that that'll definitely help them out in the long run. That'll be something in the tail end that they'll be benefiting from. And then there's also an AI style assistant. So, if you need some help or whatnot, but then your stylist isn't here, you also have you have an AI stylist that's going to help you out. Let me see, let me take a look. So right now they are in the growth phase. They're digging deep into the growth phase, and I think it's pretty good. That's why they expect Q3 to be positive in terms of active client count. So I'm excited about that. I'm waiting for that to come on in. But as you can see, so the revenue, let me see. Yeah, let's go ahead. So the revenue is 342 million. This is all in millions. But look at it in terms of like percentage rather. They went up, down, because typically Q1 and Q3 are typically their best quarters. If you compare this to Q1 of 2025 compared to Q1 2026, the revenue definitely did increase by a lot and significantly compared to those. So that's a really good sign that, the company is definitely doing really well and definitely have more customers shop at their shop and come back. As you can see, their active client improved significantly. And like compared to the quarter over quarter, it's just a decrease, but then it plateaus and it's flat. And I think that's a really good thing. They're also expecting Q2 to be similar to it. This one was more on the higher end. They expected the CFO David Efter expected it to be either flat or down by 0.5%. So it came in the higher end to be down by 0.1%. So I think that that's pretty good. And then as you can see, something I was talking about is the RPAC continued to increase. It went up by $10, which is really, really well, maybe comparing it to the other ones. You know, um, the rate of it is so this is another indicator that is doing really, really well. The only thing, the reason why I think it's gonna correct itself, it has to correct itself, is the active clients is an increase it's pretty good, but it's still a decrease. So there's gonna be the up and down. That's what I think. Let's take a look more about on a gross margin. Gross margin came at the same as Q4 last quarter, but then if you take a look at it from Q1 of 2025, there's a decrease. That's not good. Um, they're saying that the reason why the gross margin is like that, it is because of some of the negotiations that they had with the shipping, and especially with the carriers like the UPS or something like that. So that's kind of impacting the gross margin. I mean, it's still within the range that I want it to be. At least it doesn't fall below 40%. I like to invest into businesses that's around 40% or so. So, and then as you can see, the advertising, it's definitely more on the higher end, and beating, a year from now. But it's definitely on a higher end, which you can see is it's been advertising more, so more exposure, more customers you get. So you can kind of measure that with in terms of, the revenue. So is the advertisement actually making up profit? Because typically when you advertise, especially with the styling service like this, you got to think about it. You typically see the progress. It'll be a tail end, so it won't be a headwind. It'll be a tail end. tailwind. So it'll be on the back end that you'll see the the efforts that you put in, and that which I think we're seeing pretty soon or whatnot. Adjusted EBITDA is 3.9%. Mm, it's is okay. It's all right. It's all right. Let's take a look over here. So overall, not pretty bad. Stitch Fix still has a lot to go for itself, you know. It still isn't out the woods, but we are seeing the investors are seeing really good results so far. They're happy with where it's going, its trajectory, but it's still not out the woods. It's still operating at a negative. But we'll see where it goes. Again, next quarter, I expect it to do something very similar, but I think next quarter it'll go back up to $5 per share. And I want to try to get in when there's like low $4. So I'm waiting for. Let's actually go back. Um, yeah, let's go back. That's some of the financial highlights that I just wanted to go and show you. So yeah, I'm still waiting for it. Like as you can see, I'm waiting for it to go down around $4 per share, like right over here. If I can get it at, because that was what I was at previously, and I made a decent return. But I want to try to get it at $3 per share. Um, but I think this helps me out because again, this was the government shutdown, a lot of uncertainty, but then now there's more certainty within the company. When the price corrects, it's going to correct. I think it's going to go down. That's my projection. I don't think it's going to go higher than this, especially after the earnings calls beat. It's hard to beat that, you know, because previously like 60, okay, that's the peak typically. And I don't think it's gonna beat the peak until like you have a really like a positive active client count within the financials or anything like that. But that just this is just revised confidence into the company moving forward or whatnot. But overall, I'm not mad with Stitch Fix. I think it's a pretty decent stock to invest in. Like me, I like to invest long term, but I like to actually listen into what's going on and sell when it's necessary and then buy in when it's, necessary as well. Not just holding for a long period, but also just making adjustments, making moves as the business goes on. So I think you can make more profit that way. And I am seeing more profit that way. Actually I'm doing pretty good from my previous strategy. If you take a look at 3 quarters, I'm still beating the S&P in terms of percentage wise. So I think that's a really, really good start. But yeah, so hopefully you guys enjoy this little bit of a insight, this little overview of my portfolio. I'll definitely be doing more of an update coming up on Q2 that they're coming up. So Q1 for us next year, it'll be the Q2. But the one that I'm most excited about is it's for us for the regular financial calendar. It's Q2, but for them it's Q3. So I'm really, really excited about that one. And by that time, I should have even more money invested. I want to try to get to double that if possible. Try to get to 10,000 or as close as I can to 10,000 before Q3 hits, because I think that's when the stock will shoot up, beat the all-time high that it currently has at the moment. So I think that's pretty interesting. But I hope you all enjoyed everything. Enjoy your Christmas. And make sure just be around family. Just enjoy that family aspect. Get a gift for someone this year around. It's very, very important to just kind of build and nurture those relationships with the people that you care about around you. It's good to invest, but it's also good to invest into relationships and stuff like that. I'm a big believer in that. But without further ado, I hope you all enjoy your day and tune in next time at Invest IQ. Take care. Have a good one.